Imagine waking up one morning and discovering the company holding your retirement savings never actually had the money. The profits were fake, the assets were inflated, the debt was hidden, and while ordinary people trusted the system, executives quietly cashed out billions. Most people remember Enron, but Enron was tiny compared to what happened next. Because this fraud didn't destroy one company, it infected the entire global financial system. And when the illusion finally cracked in 2008, millions lost homes, jobs, savings, and trust itself. So here's the question: how did banks turn worthless debt into safe investments and convince the entire world to buy them? To understand the scam, you have to understand the American dream. For decades, banks handed out mortgages to families buying homes. Simple. But Wall Street saw something else. Not houses, not families, products. Imagine thousands of mortgages being thrown into a giant blender. Prime loans, risky loans, even loans given to people who could barely pay. Then the mixture was sliced into pieces, packaged beautifully, and sold to investors around the world. These products were called mortgage-backed securities. On paper, they looked safe, but underneath, they were packed with financial dynamite. The system worked like a pyramid built on confidence. Banks issued more loans because they no longer kept the risk. They sold the loans immediately to Wall Street. Wall Street bundled them into securities. Rating agencies stamped them with AAA ratings. Investors bought them believing they were safer than government bonds. Everyone made money, so everyone kept lying to themselves. It was like selling boxes labeled gold without checking what was actually inside. And the worst part, some firms secretly bet against the very products they sold. They knew the structure was rotten, but the fees were too profitable to stop. By 2007, the machine had become unstoppable. America wasn't selling homes anymore. It was selling debt. Then interest rates rose. Homeowners started missing payments. Tiny cracks appeared first. Then entire walls collapsed. The safe securities suddenly became impossible to price. Banks stopped trusting each other. Credit markets froze. Lehman Brothers collapsed. Panic spread globally. Within months, over $10 trillion in household wealth vanished. And the people who built the system, many walked away rich. The crash changed everything. Governments printed trillions. Central banks cut interest rates to near zero. Asset prices exploded. The rich recovered fast. Ordinary workers didn't. And today, the same incentives still exist. Complex products, hidden risks, private profits, public losses. The names changed. The system didn't. Because modern finance survives on one fragile thing: trust. And history shows when trust breaks, everything breaks with it. So ask yourself, if another financial illusion is already growing today, would we recognize it before it collapses?